Well, welcome to Investor in the Family Radio. This is Brian Bain, your host, and we're joined, or we have joining us today, I should say, Joe Albano from Seeking Alpha. Joe, how are you?
Good. Thanks for having me on the show.
Hey, great to have you, Joe. And today, Joe released an article a few days ago called Micron, the Catalyst of the Year. And it caught my attention. It was one that I wanted to follow up with Joe on. And so we're going to kind of be basing a lot of conversation off that article today. If you want to see that article, you can click on the show notes and access that directly. But Joe, for people who haven't read the article yet, do you mind giving us a little bit of background on that article and kind of what's been going on with Micron?
Yeah, for sure. Yeah, so the article I came up with because this analyst day that they were holding, and they do it yearly, and many companies, as you know, hold an analyst or an investor event once a year. But for Micron, it was interesting. There was a lot of things converging at once. It was their balance sheet was becoming up to net cash positive or net cash neutral at least. They were just in the middle of this year of great earnings. The DRAM and the NAND market dynamics are at a pivotal point where a lot of analysts thought this could be the beginning of the end for the memory cycle. And they had already alluded that they wanted to talk about their next memory, which was 3D XPoint, and how they were doing with that. So there was a lot of things coming together where I thought this was actually even more of a catalyst than any of their earnings this year.
Wow. Okay, and so leading up to the event, because you wrote the article before the event, and now we're recording this podcast, I guess the day after the event. What were you anticipating or looking forward to? And you are, and just to be clear, you are long Micron, correct?
I am long Micron.
Okay, cool. So as a long, what were you hoping to see?
I was hoping to see that they were cash neutral or on their way to it. So they're 2 weeks away from the end of their quarter. So I was hoping they would have some update with that. I was looking for what their earnings would be for this coming quarter, if they would update us with a pre-announcement, or if they would give us some insight into how the quarter was going, and mostly to give us some direction on where the memory market was headed.
Okay, so and it's specifically regarding, so you're looking for them to see cash neutral, when to see upcoming earnings pre-announcement, and the direction of the memory market heading forward. What were your expectations, or what were you hoping to see in regard to the memory market?
I was hoping they would pretty much tell us what a lot of us already know, and that's the DRAM market has held up pretty well. And a lot of people like to quote the spot pricing of the DRAM market, and it's really about the contract pricing for the memory producers like Samsung and Micron. So I wanted them just really to emphasize what exactly we all knew, but make it more apparent to the market and to Wall Street that, hey, this is a different time than in the past. You know, there's only three major players in the DRAM market, as opposed to the 6, 7, or even 8, I think it was, just a few years ago. And there's been a lot of discipline, and there's been a huge driver of demand with AI and cloud and all kinds of server memory. So pretty much just to reinforce what a lot of us knew already, and see if it sticks, this year, that things are different.
Well, and obviously in a moment we're going to shift over to see what actually happened yesterday, because obviously people want to know that. But I want to kind of build up a little bit more in advance as well. So you mentioned DRAM, and I'm going to just show my cards. I do not have a lot of background with processing companies like Micron and others, and so I'm familiar with like DRAM and NAND and some of those words. Do you mind breaking down, just briefly, some of the core processing products from Micron, and
Sure.
kind of like what differentiates them and why we should care?
Yeah, definitely. I mean, I think most of us, if not all of us, have a smartphone in our pockets, and DRAM is the memory that your smartphone is using as you open up apps. It keeps those things in active memory. On the flip side, your NAND memory, your flash memory, sometimes is referred to, is the storage on your phone where you're actually going to save your pictures and your videos. It's when you turn your phone off, that memory still stays, as opposed to your DRAM, which when you turn your phone off, those apps you had open, they're not going to be open when you turn it on again. So it kind of goes in between that. And then the third thing is a brand new memory that they call 3D XPoint. It was a collaboration with Intel and Micron, and it's a different physics behind how that memory works, and it's actually in between this volatile memory DRAM and this non-volatile memory NAND, and they see a good use of it in the enterprise and the cloud.
Interesting. And tell me this, about 3 or 4 years ago. I think Micron was like in the 30s, and it was, I was reading articles all over the place about how it was a great investment and things like that. And then, and then that ended up being the peak for a while, and it dropped down to around 10 or so about 2 years ago. Yep. And now it's 50 or 60, in the 50s or so, somewhere around there. Like what, can you briefly tell me what happened there?
So a couple of years ago, when you saw it in the 30s, that was the top of the memory cycle at that point. And what happened was the PC memory, I guess industry, we'll call it, that world the demand just dropped, and there was a lot of supply in the market. So basic economics 101, supply and demand.
Sure.
They had a lot of supply, not a lot of demand. So the pricing of memory sticks essentially dropped, and that doesn't help these memory suppliers who are actually trying to produce this for a profit. So it essentially meant that they were breaking even on what they were making, or they were losing money on each of these DRAM products that they were selling.
So basically, and that is what tracked them down from 30s to around 10. And yep. And then obviously, so I guess we're in a new memory cycle now. Like what's is smartphones primarily what's driving the demand down?
So actually, yeah. So, and we'll get into this a little bit later when we talk about their analyst day, but the major driver that they've been seeing is the growth in not just smartphone sales, which is kind of, to some people looks like it's at a peak at this point, but it's also the growth of content, how much RAM and how much flash memory is in each phone, as well as server and enterprise, how many data centers are like Amazon and Facebook and Google building, and how much memory they all need. And there was an interesting stat that I learned just yesterday in the analyst day was the amount of DRAM and NAND required in an AI type of server is 6 times and 2 times as much respectively. So the drivers for what is required to get data centers online and to get ones that are using this AI, like NVIDIA's heavily invested in, or Amazon's heavily invested in, to just to learn things that people are doing to make patterns, to create algorithms that understand like human principles and things along those lines, natural language processing, or diagnosing somebody based on an image from a report that the radiologist got while they were in the hospital. Things like that just require tons and tons of memory. And that's really where this, and I hate to use the word cycle because I'm sure we'll talk about a little more, that this has been a different kind of ramp up as far as the memory industry is concerned. And it's been happening since late 2016. And a lot of people thought that this would be the peak right here, but apparently it doesn't seem to be, as earnings have just continually driven forward quarter over quarter.
Well, let's use that to leverage into what happened yesterday at the meeting. And again, you obviously you're looking for this to be a major catalyst. So let's talk through what actually happened and what did you learn and how do things look?
Sure. So actually, before the analyst day even started, they actually did a pre-announcement in the morning with a release, IR release, that said that they're expecting well over what they originally guided for at the last conference call. So that actually sent the stock up around 3 or 3.5% during the day, and that was before the analyst day actually got kicked off at 1:30 in the afternoon. So from there on, we heard a lot of good things. I'm going to actually look at my notes here. So one of the bigger things is they talked about the memory market, which is something they kept hammering, was the demand drivers were different than the previous memory cycles. And like I said, server and AI and things like that are driving it. The amount of memory needed for smartphones and the AR, the VR that are going into them. Apple's making a big push into AR as far as phones are processing on board, as opposed to, things that are happening in the cloud. And also Internet of Things, the edge case or the edge devices that are out there doing all the sensor gathering or the data gathering. A lot of that stuff they can't send back to the cloud to process, to send back to the edge device because it takes too long. Right. It needs real time understanding of what's going on. So a lot of those Internet of Things devices or IoT devices are doing a lot of their own analysis on their own hardware right there at the edge. And so that's been driving things like that. And
Wait, can I ask a quick question in that regard on the Internet of Things? Is that primarily on the enterprise side or the consumer side, if that makes sense?
So I know, I understand what you're saying. So a lot of the initial stuff has been more on the enterprise.
Okay.
But I think we're seeing as consumers a lot more things in our homes. Like just think about like a Nest thermostat,
right.
or a refrigerator that knows your milk is going bad. Things like that are considered Internet of Things type of devices.
Right. No, that makes sense. And I mean, we've got a few things like that, and that's what I'm assuming. But I didn't know if, I'm thinking about the devices that we own or that you see popularly marketed. I think about how much processing power is required locally for that. But I'm just curious how much maybe I'm missing on that. So that's helpful.
Yeah, and surveillance cameras too. If you have surveillance cameras looking over your business or your storefront or your house, things like that. Those are all internet or IoT devices. Things in healthcare. I worked in a hospital for many years doing IT work, and there's just a lot of things that they can do that are just wirelessly connected for the patients, just to gather data and to process data and to put it on record so they can go back later and say, hey, what happened here at 1:30 in the morning when we weren't able to, when the doctor wasn't there, or something like that.
Yeah, well, you think, man, gosh, you mentioned hospitals. That's a whole crazy world of opportunity there. I mean, I was just in, I live in Dallas, and I was in a new hospital here in the area just a few weeks ago, and it is remarkable. It's
pretty much like walking into a technology supercenter, isn't it?
It really is. Every room. It's astounding. So you think about that, then you think about all of the local processing needed, like you said, for Internet of Things dynamics, and then if there's AI dynamics within all of those, man, I mean, it's remarkable.
Yeah, and so I just wanted to get back onto the other thing that was
please.
big with Micron was they kept hammering their little mantra that they had yesterday called the new Micron. And I think it's worth noting that they're talking about how they've gone from a commodities type of memory supplier to a value-added supplier who's actually creating total packages to sell. So, solid state drive, ready to go out the door kind of thing, where they're selling more high-valued type of products rather than just the NAND, arrays that go into each solid state drive. They're actually selling packages now that are building their portfolio and managing how they're upscaling themselves to be a complete industry provider rather than just a commodities provider.
So, and again, I'm going to confess some of my ignorance regarding processing companies, but from what I understand, does that sound a little bit kind of like what NVIDIA has done?
Yeah, so that's interesting you mentioned that. So they've gone from simply providing GPU chipsets on graphics cards to really giving servers a package that they can implement that does a lot of this AI stuff and the neural understandings that the data that's going into them to process this stuff real time rather fast and enough that they can get good data out of it to process other things, and that's not even talking about, autonomous vehicles or things like that. We're just talking in the cloud and the enterprise.
Wow. Okay. And then, and I guess one more thing on that point too, is part of that, them going from commodity to value add supplier where they're, uniquely creating processors for specific clients, right?
If we're talking NVIDIA, that's definitely the case. With,
right. The NVIDIA, but so is that similar to what Micron's saying? A little bit different.
It's similar, yeah. Okay. So I wouldn't say it's much different. They're actually, So actually, it's funny that you mentioned that. But Micron and NVIDIA, they had a video yesterday during the Analyst Day where they talk about how close they collaborate, where they both create complementary things and go to market together.
Interesting.
Right. So Micron or NVIDIA may need some high performance memory that Micron goes, okay, well, we have this. And NVIDIA goes, well, we need something more specific and tailored to us. So they go, okay, well, let's work together and create something that is very specific to your product. And we can release it to market as a joint, kind of a joint opportunity. So
what is so different about what NVIDIA does and what Micron does that they would work together instead of compete on things like that?
Sure. Yeah, that's a good question. So NVIDIA does a lot of the the processor side of it, and that's mainly what they do. Now, processors are good, but you have to have some place for the processor to retrieve and get data, and that's where memory comes in, and how Micron can be value added to them as opposed to a competition. So rather than NVIDIA trying to do a hey, let's just try to figure this out on our own. And it's interesting to note that they're fabless, where Micron owns all the fabs, and NVIDIA would need to source it from somewhere else anyway.
Gotcha. Okay, that makes a lot more sense. Okay, cool. So they kept hammering their mantra, the new Micron. They've gone from commodity supplier to value add supplier. I think that's where I interrupted you.
Yep. No, you're good.
Any other dynamics from the analyst day that stood out that you initially wanted to share?
So yeah, I mean there was the biggest thing that came out of it was the CFO David Zinsner talked about what they were planning on doing in the coming fiscal quarter. So the fiscal year rather, and their fiscal year ends in August, I believe, August 31st. So their 2019 fiscal year is coming up rather quick, and shareholders were looking for some kind of update as, hey, you guys are going to be cash neutral. What are you going to do with your extra free cash flow tonight? You're not delevering and trying to clean up your balance sheet like, you were when you had $12.5 billion of debt and only $4.5 billion of cash only, I think it was a year ago.
Wow.
Or a year and a half ago. So they've come a long way where they've used a majority of their free cash flow just to delever this last year. And the amount of free cash flow that they've been bringing in has been astronomical, and it's broken all their records as far as their history as a company has gone. As a matter of fact, I think it might have been during the Q&A, but I think the CFO said something to the effect of that the cash flow that they've had in the last year actually outnumbers the cash flow they've had as a company combined previously to this year. I mean, if that doesn't make a statement, I don't know what does.
Wow. Good grief.
Yeah. So, I mean, it's definitely a different Micron and a new Micron. It's not just some marketing thing they're coming up with. It's truly proven out.
So, sorry, how much of that free cash flow is related to debt being pared down versus just a massive increase in revenues?
So I think it's twofold. So I think the revenues increasing their cash flow has allowed them to put their capex where they want it. So they've been able to take care of those requirements,
right.
And they've been able to use at least half of their free cash flow to delever and to do more flexibility on the balance sheet. Because from what I understand, and I don't have a confirmation on this, this is something that I actually saw one of my readers or commenters said that a majority or a good portion of their cash is restricted due to some kind of partnership or the acquisition, I forget which, and they didn't have a lot of cash on hand to actually just pay off the debt. So they did back in November, I think it was, they did a secondary offering and they raised like $1.2 or $1.4 billion to pay off some of that debt, on top of using the free cash flow that they've been having close to $2 to $2.5 billion a quarter to continually pay off more of that debt.
Okay, right. Wow, that's amazing. So tell me this. So Micron, let me pull it up real quick, has obviously been performing really well in light of all this information. And here's the chart. So about a year ago, we're looking at Micron at about $30, and now we're right at 60. Yep. Obviously that's big for a year. And then if you go back 2 years, Micron's at like $10.
Yep.
So, you said going into this, people wondering, hey, is this the top of the cycle? And then obviously Micron is trying to make a very heavy case for the fact that no, we're not even close due to all the things we shared as far as, AI and Internet of Things and just the extreme growth and need for processing power, basically.
Sure.
So what are you thinking? Is this a time to like, hey, Micron's been, it's increased 6x in about 2 years.
Yep.
But it's still a good place to be? What do you think?
Yeah, so it's funny you asked this question because end of last September, I was on Cheddar TV making the same case when it was about $38 a share, I think, or $36 a share. And they said, Joe, you really think that there's going to be another good run in Micron, that, this is not a time to take profits after it's run up from, $14, $15 just recently? I said, no, I think my 1 year price target was still at that point at $63 a share. And
well played.
Yeah, and we're right there now. So it's interesting that you asked this question now, and I have been reassessing, where is Micron at this point, and I think the next way that the stock is going to start growing, at least capital appreciation wise, is the multiple expansion that the market should be awarding it. I mean, it runs at a 5% forward PE right now, and that's nowhere near the industry average. Even if you doubled it, it's still below the industry average. So
you said
I think
a 5x forward PE.
Exactly. So there's just so much.
I'm sorry. So in the industry average is right around where?
So if you look at like we're not going to use Nvidia because that's a different that's a momentum stock altogether. But if you use like the Intels or the peers in that nature, it's closer to like 14 to 15.
Oh wow!
And I don't really, yeah, exactly. And I don't really expect Micron to go to a 15 multiple like in a year. But I do expect that the street starts warming up to that. Micron is not the same Micron it was 3 years ago, and you can't award it that multiple from 3 years ago. And I would be satisfied if I saw it in the 11 to 12 range, and let the chips fall where they may. So, other than just their earnings, continually to be impressive this past year and in this year going forward. I mean, they're earning in one quarter what they used to earn in 1 year. So the amount of it's two-sided. So the amount of their earning and the amount that they're undervalued as far as a valuation perspective, those two things are starting to come together. And I think it's going to start shifting to the second one, where the market is going to start awarding it a better multiple and where I think it should be.
So and just basic, obviously. A lot of this is based off of their analyst day, which you would expect to be bullish, especially if you're going to.
Yeah, you don't expect them to go out there and tell them, "Hey guys, we're closing up shop."
Yeah, hey, we held a special event just to let you know that we're doing terribly.
Yeah.
So obviously very bullish, but at the same time, their argument seems very logical. I mean, the increased memory processing demands, in light of AI, in light of the Internet of Things, and just the overall growth in content demand. I mean, those are all things for me as a consumer. I think, well, yeah, that's obvious. Like I can see that happening. So
it doesn't surprise anybody, in the world we live in.
Right. That makes sense. I mean, it's just like, again, like, if you owned a computer 10 years ago, the amount of hard drive you needed was probably like 100 megs in your hard drive. Now, if you don't have a couple of terabytes, you can't use your email. You know what I mean? It's just changed. Right. It's changed so fast. And so that doesn't surprise me. So the idea of the demand being there makes sense. I'm trying to think of what bearish factors could there be that they didn't share, that were missing, that could say, hey, you know what, Micron's not a buy now versus, hey, it could double from here.
Yeah, and that's a really interesting point. And I'll bring up the one thing that the bear thesis continually has brought up in the last year, and that's China as far as an entrance into the memory market. China obviously wants to be self-sustaining. They want to be able to do things that the world has been providing them. And the idea is that they're going to pour money into memory, into semiconductors, and try to get their own NAND and DRAM memory industry going. And the interesting thing about that is you just can't buy building space and buy the equipment and do it. There's a lot of patents and a lot of IP that has gone into where Samsung, where Micron, where Toshiba, where they all have gotten from many years. And it's not like you could just jump into it and start creating this memory. Even if they wanted to do 3 generations ago, it's still going to take the amount of know-how and the technical prowess to understand how to do this and how to produce it in enough of a mass delivery to customers. Which is another point, who are they going to sell it to? All these customers are looking for specialized memory in 2018 and 2019 going forward. And you can't settle for just run-of-the-mill PC DRAM. It doesn't work that way. It would have worked that way 3, 4, 5 years ago, but That's one major bear point is about new entrants and basically flooding the market with supply, right? So that would bring the price down,
right.
And therefore the market that Micron and Samsung they all sell into is going to fall flat, and we're going to see prices decline, and they're not going to be able to sell for a profit. The other side of that also is Micron talked about how well they've come along to increase their efficiencies and their break-even points. They didn't come out and say this, but essentially their break-even points would be much, much lower than it was just 3 years ago because of the efficiencies they've built in and being able to move their costs way down and get to market faster and to transition from one technology to the next generation technology faster and getting customers onboarded much quicker and making the profit of that specialized memory way faster than they were in the past, where they were taking a long time, and this would cost money, right? Time is money. So the longer they took to get the next generation out, the more they were losing out on customers who needed, specialized memory.
Right. So even if China, does come in and wants to be a major player, obviously they have the ability to eventually do that, but it's something that it would take time. Like this is not something where like in a year or two, we're going to wake up and Micron's being decimated from international demand and international competition.
Yeah, no, exactly. Yeah.
So tell me this. So you said about a year ago, you were on Cheddar TV and it was Micron's around $30, and you said you thought fair value was around 63, or your price target was around 63.
Yeah.
Now we're right around 63. Do you have a price target in mind from here?
So I haven't actually formulated one. I haven't gone back to my model and updated it with all this new information that we've gotten in just the last few days. But I mean, if we even have the market expanded to an 8 PE multiple, I mean, they're looking at earning close to $12 or $13 per share, and 8 times that is $96, and that kind of falls into where a lot of analysts have moved their price targets up to. They're now into the 100 and some odd range, 105, 112, I think was the highest I saw today, just based on the back of yesterday's event. But I would not be surprised a year from now that Micron is trading closer to $85 to $90 a share, just based on their earnings staying up, their free cash flow. Actually, the biggest thing that came out of yesterday was the announcement of their $10 billion share buyback, which, as we know, that can support a stock just by knowing that that's behind the company. And not only just increasing the earnings per share based on a smaller share count, but just the fact that the market knows the company is now the biggest buyer of its own stock. So
that'll help demand.
Yeah, that helps demand a little bit. And they're comfortable enough to announce this more than 3 months out before they can actually enact it. It was authorized for fiscal 2019, so September is when they could start buying back shares, and here we are 3 weeks into May where they're like, hey, yeah, this is coming forward. So, I mean, the price can increase to $70 by then, and they still believe that it's going to be an undervalued proposition. Yeah, exactly.
Yeah, that is funny. It's kind of the reverse way you want to do it. It's like a reverse sales tactic. Hey, I'm going to buy a lot of this. Why don't you go and bid the price up as high as possible? Yeah, and then we'll guarantee to come in and get some of it. Well, may this be a lesson to all of us. Again, we mentioned a few years ago that Micron's in the 30s and people were loving it, and then you said that cycle came to an end and it dropped down to around 10. And here we are in the 60s 2 years later with price targets in the over $100 or more. And just the power of sentiment. Just because something becomes hated doesn't mean it's not still a great investment. So we'll maybe walk. And just because it's super loved doesn't mean it's time to get out either. So,
right.
Well, hey, Joe, thanks so much for joining us on the show today. We really appreciate your time.
Yeah, thanks, Brian. It's a pleasure to be here.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.